Today we're going to discuss optimizing your Asia Pacific trading network, and we're going to cover several segments of this discussion. We'll start off first with what's affecting connectivity to exchanges in APAC today. The next we'll talk about the trend toward integrated connectivity and data center and trading applications. And then we'll finish up with the importance of ownership for diversity and continuity. What's the situation when connecting with exchanges in APAC? Trading volume is up, as are data demands. Because of the 2020 COVID-19 coronavirus and the Saudi Arabia oil price war with Russia, the financial services industry has seen volatility and trading volume increases as the amount of an asset or security changes hands over a period of time. And let's stick back into earlier this year. Oil was at an all-time low in March. We were getting gas for about $2 a gallon. And the global economy shifted to a remote online workforce in April. So millions of us all around the world went from working in the office into a remote home environment. And then there were several hundred million, millions of other people who lost their jobs altogether. This impacted the stock market, right? The interest. So you had the travel industry suffer, right? So the volume of trades probably decreased. But if you look at the over the top or the tech firms, those firms probably stocks went up and traded with high volume. So look at volume as it measured by the top contracts traded in regions, right? Often the volume of order flow varies in Asia, in Europe, in the UK, as well as in the US throughout a trading day. So this data is basically looked at via tick-by-tick data. The most detailed display of the market's trading information of price movements. So some of the major contracts being traded, either via voice trades or electronically traded, are E-minis, Brent futures, WTIs, S&P 500, the NASDAQ 100, and the US 130. Now let's take a look at the local regulatory side, right? The local regulatory change with increased focus on sovereignty. So data sovereignty comes into play when an organization's data is stored outside of their local country and is subject to the local laws of the country in which the data resides. The main concern with data sovereignty is maintaining privacy regulations. So data sovereignty is the idea that data will be subject to the laws and governance structures within the nation it's collected. The concept of data sovereignty is closely linked with data security and cloud computing and technological sovereignty, which we'll go into a little further in my presentation. Next, we'll look at transformation leading to the adoption of hybrid cloud and interconnection infrastructure. With hybrid clouds, organizations can leverage both the public and private clouds to accommodate their diverse needs. The main differentiators between the public and private cloud is that you aren't responsible for any of the management of a public cloud hosting solution. The private cloud is a type of environment where your software is managed by your internal IT. So certain workloads can be migrated onto the cloud, and sensitive data can be kept on premise. Working on different platforms also allows data to be accessible to all parties, including off-premise customers. Okay, let's move along. Let's look at how firms are integrating global exchange connectivity to data centers and trading apps. Direct market access to exchanges and data centers via low latency connectivity are important. Direct market access platforms are used to simplify and remove complex barriers to market with accessing global liquidity. Using co-location connectivity hubs, customers have access to electronic trading facilities that gives investors wishing to trade financial instruments a way to interact with the exchange's order book directly. If set up correctly, co-location can be used with direct market access to deliver low latency, hosted, managed, and operated connectivity for order entry, execution, pricing, pre and post trade, risk management, and to analyze market data to and from the entire trading ecosystem. They're all co-located in the same primary and secondary market data center. So financial customers have asked that direct market access also provide low latency access to a range of venues throughout Asia, Australia, Europe, and the UK using co-location connectivity hubs. All right, let's next cover exchange and data center co-location interconnection and hosting. So we'll look at this in two segments, primary and secondary. So the primary will be when I reference stock exchanges. So picture your New York Stock Exchange or the CME Chicago Mercantile Exchange or the Australian Stock Exchange. Those will be your primary regulated exchanges. And your secondary markets will be your Equinix data centers or your digital realties, where basically you have less regulation, right? Maybe a few miles or kilometers away from each other. So the primary and secondary market interconnections require low latency physical and virtual data connections to be used between financial services firms that enable the rapid exchange of data. So co-location and hosted service interconnection builds inside financial data centers are strategically designed for speed, but data center selection is also an important driver for profitability, co-location transactions, and lower costs with security and scalability. So let's look at what co-location provides. Co-location provides a central meeting place for financial trading networks and provide access to financial cloud providers, sell-side firms, and buy-side firms to host their virtual or physical server infrastructure with interconnections and APIs that enable them to efficiently exchange traffic with one another. Selecting the right service provider with market access to a variety of multi-asset trading platforms are mandatory to achieve sustainable profits with maximum performance. And then let's finish up with the expertise to consult and monitor and manage service end to end. I basically look at this particular segment as customer service. When I enter a restaurant, I look for the best customer service. I expect it. When I board a flight, great customer service. When I call my cable provider, I'm looking for great customer service. Nothing changes when it comes to financial trading technology. We want the same consistent high-level customer service. So experts in service management with great customer service are needed to monitor and manage your service end-to-end. Providers cannot ignore service management processes because more and more customers expect platinum service management from their suppliers. Failure to implement high standard or high service management can lead to lost business opportunities, lost credibility with customers, and soft and hard churn of disconnected customer contracts. Great end-to-end service management will produce results in cost savings, reduce occurrences of incidents, and increase customer satisfaction. So we definitely focus on great customer service. Next, we'll talk about how do we connect around the world. And since this discussion is focused around the financial trading side of connectivity, I'll focus on that. But there's several ways of connecting around the world for companies like ours. But let's focus on the financial trading side. Low latency financial data is transmitted at the speed of light through glass fiber. Global telco providers have built gigabit over fiber, wavelengths, dark fiber, and other high-speed, low-latency networks to deliver high-speed trading financial transactions to Asia. This is achieved using the latest optical gear connected to the most direct and shortest distance terrestrial fiber in region between two AN and ZN data center locations. So this picture, the AN originating the trade data and information, say, is the New York Stock Exchange or the Chicago Mercantile Exchange. And the ZN in the regional area is the actual cable landing station, which is, say, on the west coast of the United States. So the goal is to have the most optimal direct route between these locations before it hits the subsea cable, which you see here in the picture in front of you. So this path must be established on land before connecting to a low latency trans-Pacific subsea cable or an intra-Asia subsea cable. Designing shorter paths with minimal equipment and unnecessary hops or reroutes of the physical fiber paths will provide better round-trip delay times as well as lower latency performance. So the most optimal routes that we build and other companies build are the most direct with minimal hops in the paths or reroutes. Okay. Next we'll cover diversity and continuity demands cable ownership. Financial customers should look for and demand to work with network providers who own and operate their own submarine operations assets. This will offer logistics control during repairs and upgrades of high capacity, high availability, redundant, and diverse subsea network connectivity for transmission of their hosted trans-Pacific financial trading traffic. The best networks and cable systems are designed to connect and service each country it provides service to with at least 3 or 4 diverse, high availability, redundant trading links. If the primary route fails, customers will have access to routes 2, 3, and 4 to keep their business up and running. Expertise with low latency, high speed trading transactions securely and reliably is what you expect from the owner and operator of Asia's leading subsea cable network and the world's leading data center provider. So, in summary, we covered the greater trading volumes necessitates resilient, high-performance connections into exchanges. We also covered the secondary market access with data center and co-location integration for economies of scale. And we also touched on understanding cable ownership and how key it is to enabling privatization and resilience. Here is a network design of our primary markets and secondary markets. So the primary markets are highlighted in the green circles. And within those green circles, you see the cities of capital markets that are connected either directly or indirectly. So directly for the lowest latency and indirectly for the most resilient, redundant route. So that way, like I said earlier, the services are up and running. And then the circles on the outer side in white with the red logos are our secondary market locations, which houses the brokers and financial services community that need more space power to operate with less regulations than the primary regulatory exchanges. So there's a balance between customers having co-location space and power in the exchanges and also having co-location space and power in the secondary market. On the right side, you'll see the countries in which these locations are located, and you see the U.S., Australia, Hong Kong, Japan, Korea, and Singapore. And some of the locations, you'll see a dark green circle, and those basically mean that there are cloud gateways there, so we have access to Azure, AWS, IBM software for access to the markets. And well, if you look a little closer, you'll see green circles, light green circles. That means there are internet gateways at these locations. So only can we provide access to the markets using direct, low latency access for trading and to send, receive, and for analytics. But we also have to provide access via the internet, so for remote users to access that way. All right. So I think that pretty much sums it up. I'm available for questions if there are any, and I would like to thank you for your time.
Great. Thank you, Isaac. And again, reminder, folks, send in your questions. And I have one personally, Isaac. And that slide that you showed us was the Pacific Ocean to scale.
Yes, exactly. It was.
Oh, okay.
That's just
So it's as tall as the skyscrapers. Got it. No, I just thought that was it was like we're taking this giant Pacific Ocean and we're shrinking it down because we're connecting at the lowest possible latency. Speaking of low latency, out of low latency, exchange connections and cable ownership, these are three selection criteria that you highlighted. Which is the most important, or are they all equally important, and why?
I would say they are all equal, but if I had to choose one as the most important, I would say it would be ownership. Because if you own the network and you own the co-location facility in the primary and secondary market, you control access to the market. And, you control access to liquidity end to end, and not just at one end. It also gives you the ability to remain an innovator because you have the ability to do things first, which should keep you in front of the market competition as things change. So I'd say ownership, but all three are equally important.
Well, and I would also add, if you've got ownership, you can engineer lowest possible latency and exchange connections if you don't already have them. So I would agree with you. That's foundational. How has the pandemic changed the way financial services organizations view the solutions you talked about? Any change?
Yes, it basically redesigned the way this market looks at the workforce and how to keep a business up and running during a pandemic or any natural or disaster. Um, Having the right partners who have established footprints in the markets in which you trade are strategic. You can't learn what strengths or weaknesses they have during a major issue. You have to know that ahead. So I think this really proved out that companies are looking to make sure that their business can run seamlessly, whether the the work side of the business is either at home or remote. And when you have restricted travel, the transmission of data, whether it be via Zoom or Teams, is so important and for communications with each other within the country. So having a reliable network, being prepared, and making sure that you have a disaster plan in place is strategic, and I think that's what they have learned the most in the market.
Yeah, for real. I mean, I mean, the whole notion of having a disaster plan in place got really tested in March. So,